Yo, yo, yo. Yes, give me a second here. Just one moment. I'll be right back and we'll get started. Okay. Let's get going here. Again, good good afternoon. Hope everyone had a great day. Always, if you guys have any questions, feel free to type them in the chat. Feel free to send me a DM on X and or Discord, and everything will be answered in any way possible. By the way, MU's earnings were absolutely phenomenal. Their guidance, they raised the revenue guidance by $4 billion. They raised EPS guidance by 100% from 4 to 8. They raised 14 billion in revenue to 18 billion. That is absolutely insane. This is a name to watch tomorrow. If they sell this move, I would be very, very worried on what the market could do. Qs is up just about $2 here. Obviously, market was pretty red today. Minus 1.85% on Qs, minus 1% on SPY. So let's dive into it. We had trades today. Let me pull up my sheet. First off, you can see we did go down today. We did have a losing trade, and I'm going to explain all that right now. We'll pull up this log first. So this is a copy trading log. And so here's the results. 41 wins, 4 losses so far, 91% win rate, averaging 21% monthly return with a 260% annualized return. Total return so far is $2,600 on 52% return in general. And then here's our chart. You can see nice and up. Obviously, we did have a losing trade here. We got to just a new high, barely just a new high, and then had a losing trade today. And I'm going to explain that losing trade today because that is a big part on why I did this. So let's go into it right here. Okay. Let's go into, let me just double check exactly when I entered that trade so I can, wait 1 second. Okay. So I sold, or I should say I opened a put spread today at 1026. So here is 1026. Where is it? So this is why I got frustrated with myself today. Let's get rid of all these. Let's just make it nice and clean. Boom, 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 and boom. Okay. This is where I sold my spread. Somewhere right in this candle right here. Okay. Now, here's why I'm frustrated with myself. You guys website to check. I will put that here. 1 second. Hold on, let me just do that, I guess, quickly. Is the copy trading website? One second, guys. And then here is. Give me 1 second. I'll just make this quick so get those questions out of the way. Well, there's that, just so to answer those questions. Now let's get back to our put spread, okay? Market opens right here. We come down, okay? We have a 150 point drop. And I'm thinking to myself, and this is where I get frustrated with myself on why I entered this a little bit early today. I'm saying to myself, I think we're going to see new lows, but I decide to open a put spread here. We were holding. I don't really know why I decided this. And this is where, that frustration gets in, because I know from trading for 11 years, and obviously just doing spreads overall for over 6 years now, I know I should have waited here. And in this case, you could see it went right against us. So a put spread is where we are bullish in some sort of case. You want prices to stay above a certain level to make profit. Now, what I really should have did, which is what why I was frustrated after today's trade, was you look for a move. I was looking for this to break down. Then I should enter the spread. Now, if I entered a spread here and we kept dropping a little bit, I would have been very fine, because we would have been really far out of the money. The contracts would not have gone 200%, and it would have worked out really nice. So with that said, let's kind of go into some spreads education. What's a put spread? What's a call spread? What's an iron condor? And my way of entering and exiting, and what I'm looking for when trading spreads. So let's do that. Why did I think new lows were coming? I mean, we were kind of weak. You could see us kind of curling here. I know, obviously, that it's later now. You can see that they just couldn't really break out over this 25,100. It was kept getting rejected and instantly shot down. And I was looking for new lows. And again, that's where I should have definitely waited. So now that we basically went over that little explanation on my mistake today, and that mistake that cost me $500 on the small account, and just about $6,000 on my large account, the 5,000 to the 5,000 account, that's not 94,000. You can see here, 5,000 account, that's at 94,000 in just a year. So over a 1,700% return. It was just stupid trading. I mistimed the entry. I should have waited for that sell-off and then got my position. Where in this case, I did win. And I just took my profits because I just wanted to call it a day and get a little bounce back trade and move on to the next day. Now, with that said, I am still green for the month, 6,500 green. My only losing month is March. And I know I'm not going to be 100% in anything I do. Okay. No matter what you trade, no matter what strategy you do in the market, you are never going to be 100%. And that is something you have to understand going into the market, going into any trade, that you're going to lose and or, going to win. As simple as that is. That's where we come into that risk, and we look to, do proper risk management and sell a position at a 200% loss of the profit. Now that keeps us in the game. That gets us the ability to make that money back in 2 trades or 3 trades and be profitable. I guess you should say profitable from that losing trade. That's that sweet spot for me. Before I go into basically the whole entire thing about spreads, I'll answer some questions here. So answered that one, JJ. But how would you recommend I trade spreads in an account less than 25K? I don't want to hit PDT on my margin account. So good question. And JJ actually answered this. So NDX on a small account, it settles cash. If you hold that for the whole day, now let's say obviously you want to manage the trade if you think it's not going to go your way, obviously stuff like that. But if let's say you're 500 points out of the money and it's the end of the day, do not close that trade in my opinion, because 1, you get technically a free day trade, and 2, you're just going to collect the full premium there. So yes, I use NDX a lot when I'm doing specifically at least this copy trading. Right now, where the account is 5,000, I am trading NDX because I'm able to possibly utilize all 5 days of that trading week and take a trade every day. So let's kind of get into spreads. I'll put this chart up here while we kind of dive into it. But basically, a spread is, well, actually, we don't need any charts. So a spread is basically where you have two sides and possibly three sides. A put spread is you want the stock and or ticker to stay above a certain level. A call spread is where you want the stock and or ticker to stay below a certain level. And an iron condor is where you want it to stay in between those two sold strikes. Okay. So with spreads, you're looking to collect premium. You want the contracts to go to zero. If it goes to zero, that is basically 100% trade. So from there, now let's kind of dive into some examples. Okay. Example today, I sold let's just do Qs. I'll make it simple. So I sold the Q spread. I sold the 595 puts and I bought the 593 puts. Okay. So you get the premium from the 595, the sold net 595, and then you minus the premium for the bought 593 puts. And let's just say it's 20 cents and 10 cents. Obviously, 20 minus 10 gives you 10 cents a premium, $10 a premium per contract that you open in that trade. So now let's talk about the collateral needed for that trade. Because you're selling a 595 put and buying a 593 put, you need $200 in collateral per contract. So for every contract you buy, you need $200 to do so. So yes, this is recorded. And I will answer that SPX question in a moment. So you need $200 to, $200 to open a contract in that spread. If you wanted 5 contracts, you would need $1,000. If you wanted 10 contracts, you would need $2,000. So from there, obviously the profits add up on that as well. For every contract, you would be making an extra $10. So that is a 5% return on your investment. For every contract, you open $200, you would need $200 of collateral, and you would make an extra $10. 200, let's say divided by 10, you get a 5% return on investment there. And that's a very good trade for spreads, especially, if you're doing intraday, trading just like myself. So that is something to, wait, hold on one second. My dog, he has this little thing on his hand that he's been itching at. He's not supposed to be itching at. Bentley, good boy. So yes, that's how that works, how the contracts work. Now, if I was to sell a 595 put and buy a 594 put, then I would only need $100 per collateral, and these, let's just say the premium is $6. So I'd be making 6% return on investment, something like that, just to kind of make that clear and get that out of the way. So for the difference in your strikes is what basically, categorizes what your collateral will be for that trade. And then obviously that also calculates what your premium is that you would be making. So now we talked about a put spread. We talked about a call spread. Let's talk about a condor. So a condor is where you are looking for price to stay in between two levels. So if I sell a 595 put on Qs and buy a 594 put, the sold strike is the one that I'm worried about. I want Qs to stay above 595 to make profit. And then if I sell a 605 call, because now we're adding the call spread side to that, I sell a 605 call and buy a 606 call on Qs. I need Qs to stay in between 595, which is my sold put side, and 605, which is my sold call side. My dog's knocking into everything here. So I have $10 of leeway there. Obviously, if it gets closer to one side, you will technically be, um, let's just say we sold it right in between 600, and let's say we go to 603. That call side will start gaining premium, which in terms will basically the call side will be losing at that point. But as long as it stays under 605, and as long as I'm under that 200% stop loss, I will stay in the trade unless obviously, the market is looking very strong and I need to get out. So with spreads, again, premium burn, you're making money on the contracts going to zero, and they are losing value over time, especially if they are going in the direction you want. So if I get a put spread and it goes up, um, it will burn premium quicker because, it's going against that sold strike, it's going higher, and the probability of profit now of it going to my sold strike, gets lower and lower and lower, and then obviously the trade, reflects that in the premium dropping. Again, same example on if it's going against me and it's coming to my sold strike, it's going down, in this case as a put spread where we are technically bullish, it's going to gain premium, and I will technically losing money in that time. So hopefully that made sense. I try to make it as simple as possible. If you have any questions on that, please ask. While we're doing that, I'm going to answer this SPX question, and this is a question I get a lot. I focus a lot on Qs and NDX or NQ, and I've been doing that for 11 years. Now, doesn't mean I look at SPY every day. I look at SPX every day. I look at ES every day, the future. It's just I personally trade Qs like 24/7 compared to SPY. So it's just I know it more than trading SPY. They're usually decently in tandem, but it's just I just know Qs so much better. So it's more so that what's the best word? I like reaffirm myself with knowing its patterns, knowing what it's basically gonna kind of do, I guess, in a way, to an extent, obviously, because the market could do anything. Does anyone have any questions on that really quickly? I'll give it a minute to see if there's any questions that pop up. Yeah, but frustrating day for me because 100% on that example that we talked about where I entered too early, knowing what the market was going to, or truly seeing what I thought the market was going to do, and obviously worked out in that favor. Well, not in the favor of us in that trade, but in the favor of my thoughts. The market dropped. I should have waited for the entry on that, and it would have been a beautiful trading day. And again, it's part of trading. You're never going to be 100% correct. We're all human. It's just the biggest thing is getting those emotions out of the way, because in this case, we had a 200% loss. Sell it, move on. Okay. Follow that risk management, stay patient, wait for the next trade. There's always going to be another trade. If you don't follow that risk management, it's just going to get your account killed. And that is something that you need to stay consistent with, that risk management on anything, not even spreads, just regular trading. No one should be letting options go 50, 60, 70, 80, 90%, down. That is, there's no, yeah. What is your criteria to enter the QQ and the NDX? So that's a great question. Okay. Well, let's use today as an example. Okay. So let's say here. Okay. So here's some rules that I do. I wait till 10:30 to take the trade. I usually give the market an hour to basically do whatever it wants to do. See how it's, basically adjusting to either news, how it's just digesting a possible trend for the day. So that's the first thing. I wait till 10:30 a.m. Eastern, an hour after the market opens. Then when I actually do start to sell or open a position, I'm looking for 88% probability of profit. So with that said, you could see that on brokers, but if you don't see that specific setting or stat, all you got to do is literally look at the delta of the sold side that you're looking for, and if the delta is 0.12, that's going to be 88% probability of profit. If the delta is 0.10, that's going to be 90% probability of profit. So I'm looking for 88% plus probability of profit on my sold side to, again, also ensure a higher win rate. I'm getting far out of the money. I'm looking to collect premium. I'm looking to, make money and have that consistent win rate along with the trade sale. So now let's kind of dive into, obviously you got the simple rules out of the way. And obviously the 200% stop loss I didn't state, but yes, 200% stop loss is key. So you got the time, you got, the possibility on the contracts you're looking for, and then you got your risk management. Now it comes into the biggest factor is the timing and the entry of the actual trade. And again, a key example today where I just mistimed this trade and I knew we were going to drop and I, just beat myself over the head with it. And again, I'm fine with losing. It's more so the frustration that I knew we were going to drop. And that's what kills me in the head. Like I knew it right there. But so now let's look for the best setup in this case. So I like to do mean reversion trades. They have just worked so well for me. I mean, you could have sold the call spread. Honestly, you could have sold the call spread here, and it could have worked out. But in this case where I feel like I know we're going to drop, Bentley. Wait, hold on one second. Where I know we're going to work out. Hold on a second. I gotta make sure he doesn't bite this thing. Hold on. So I'm looking at, let's say, for example, obviously I waited, the extra 15 minutes, 20 minutes there. Okay. Now you can start to see that we're curling here a little bit. Okay. Obviously the market really never had a bounce today. But you could visually see that. I actually took a trade on this for a long, which worked out absolutely beautifully. But something in here where we start to slow down in that price action. And by slowing down, I mean, look at this. Okay. We have a big drop, we chop, we basically bear flag there, and we have a big drop again. Now you can see we start to slow down. The lows start to get smaller, 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 smaller. We're starting to curl. This is where I'd love to enter that put spread because now, yes, we dropped into the end of the day, but my put spread, so my put spread that won today, I sold for 80 puts and bought 450 puts. And I got an average of a 98-cent premium. Okay. So we were 160 points away, 170 points away from that 480 at the close. Here we were over 300 points away from that 480. And that would put us at just about a 3% red day on the market for NDX, which is really kind of unheard of. Not unheard of, but I know you guys have heard this before. And if you've been watching my videos, I think I say this almost every time now. The market closing down or up 2% is under 6% of the time, or like 6.5% of the time. The market closing down or up 3% is under 2% of the time. So we already have those probabilities kind of marked in just based on history. And obviously, they could always be hit. Again, 2% of the time, 6% of the time. That doesn't mean it was never hit 100% of the time. So, but based off those probabilities alone as well, I was getting a contract that was 92% probability of profit. And then I also had that extra statistic where, we uh, selling, closing the day 3% down would just be, you know, it doesn't happen 98% of the time. Um, so that into effect, obviously waiting for the right opportunity, like here would again would be a perfect put spread opportunity. And even when we dropped, I was green. I mean, look, you chopped a bit here. I think I got put spreads right about here, and you chopped a bit here. Okay. You obviously had a green move, which put your contracts really green. You actually could have sold them for about 70% right after this move here. So within 30 minutes, I could have sold my spreads, which I actually did. Um, and then it dropped down, came right back to that entry. You would still be green here, because of that put premium. Again, big pop again. Could have sold them for 70% again. And yes, we did drop. We did go lower. We did make a new lower day. Obviously, it's not as big as the prior moves to the downside. And yes, today in general was a very weak day. So usually when you get these, rounded bottoms and you're looking for those mean reversion trades, usually, we never usually truly continue lower. And the trade is just spotless no matter what. But today, when we dropped lower, I was still green. I was still green like 40% on my remaining contracts. Even when we dropped lower and we were, 230 points away from that sold side. So it's about timing, and then adding those rules along with it. Waiting for 10:30 a.m. Eastern, at least an hour after the market opens, having that 200% stop loss in place for risk management, and then what was the other thing? I don't know. I just got a brain fart. But yeah. Any questions on that? Yes, I did have the Condor. Okay. So if you're talking about the copy trading, JJ, I do have a Condor open that I'm swinging tomorrow, which should be pretty good. I mean, the market's up $2 after hours too, which is going to put NDX probably at around 800 or 770, and we're like 670, 700 points away from our put side. And that's the only one I'd really be worried about. So that Condor should be pretty clean at the open. I'm going to take about 70%, 80% profit, barring if it, we stay basically where we are or we just don't drop overnight. Yeah. So actually my first trade, the strikes were not safe. We actually did close. So I sold my first trade, I sold 680 puts. And those would have ended full loss. And again, that's where that risk management comes in. 200% stop loss, cut the trade, move on to the next one. Who cares if you lose? It keeps you in the game. You have money to trade for the next trade. And obviously, if we held that trade, we would have got our asses kicked. So it's about being smart and sizing appropriately and stuff like that. Do I prefer put spreads versus call spreads? No, I don't prefer, anything. If we gapped up 1% tomorrow, I'd look for a call spread. If we gap down 1% tomorrow, gap down, and look for a put spread. Because usually, now statistically, if you actually look this up too, when we gap up or down over 1%, statistically, it's like, again, a mean reversion trade where you also calculate those 2% and 3% probabilities. But, I actually physically, and I mean this personally, seriously, I don't think I've lost a trade where I've entered where we gapped up or down over 1%. I have to go back and check that. And if I did, I swear to you, it's been one trade. That's how consistent like that could be. Now the premiums are really spiked, within the first hour because of that. And you're able to go really far out. And then it just premium burns. Even if it's not really going in your direction, it just premium burns because I'm buying so far out. And the probability of profit of that, going in the money and losing would, it's crazy. Hold on 1 second. So any questions on that? One second, I see your question. Okay, so Do call spreads premium favor you when we gap up and put spreads better? Yes. This is what I really look for a lot, JJ. So yes. I kind of just talked about that. I especially 1% plus. That's where I'm talking about. So when we are gapping up or down 1% plus, that's where I really have interest in what is said right here. And again, if you look at the results, like it works. This one, 84% of the time, I'm up 81,000 or just about 82,000. It counts at 88,000 from 5,000. We start the $5,000 account. 15 wins, 2 losses. I'm up $1,000 from 4,500 to 5,700 now, and up 560 on December, even with today's loss. And here you can see the chart of that as well. I have 2 losses recently, and again, that's perfectly fine. I know I'm going to make it back. I know I'm going to consistently compound. I know I'm going to be wrong. That's 6+ years of trading spreads. Honestly, and the craziest part is during COVID was the best for my spreads. Now, yes, the volatility is higher, but the premiums are higher, and I'm able to go much further out. So I'm really, being safe there. If it does make a big move at open, what's your strategy? So I look to, let's say, for example, we gap up tomorrow 1% because we're in that direction right now, at least. Q's is up 0.4%, let's say $2. Okay. What I'm looking for is first 15 minutes, I want to see what the market's doing. So this would be the only time I actually truly open a position before 10:30. I do usually wait for news though, if we are gapping up, 1% plus or gapping down 1% plus. But this is where I usually actually open a position before 10:30 because I want to be able to collect as much premium as I can, and I could go really far out because of that major gap up or gap down within that time, and really take advantage of that premium burn and that volatility. So I hope, for example, if we gap up 1%, I hope we push up a little bit higher, kind of give me a little more favorable in that mean reversion, and then take advantage of a call spread on that. And I'm looking at a couple of days prior, the highs and stuff like that, and just calculating where I could get my strikes and go from there. So yeah, NQ is up 0.34, up 80 points here, 90 points here. So if this is up, yeah, so NDX is at 24,730 right now. And yeah. Very nice, very nice. Also, Trump speaks tonight. Could be something to watch for the markets. Yeah, of course, Fred. This is always recorded. That's why I do the YouTube. I just want to make sure it's recorded that people can go back and see it. So again, yeah, if you guys ever have interest in, trading spreads, always ask me a question. Oh, do not feel afraid to message me or do anything of that sort. I'm always there to help. If you guys are interested in copy trading, you can check the link below, the btf.peakbot.com/sign up. Same thing. If you ever want to trade with me, just in my Discord, today we're doing BTF 50 for the code, 50% off today. It's one of our Christmas sales. And if you guys don't have any other questions, I'll basically just end it here. I like to keep the videos like 30, 40 minutes at most. I know people don't want to be watching long ass videos. So if you guys have any questions, do let me know. But other than that, that is basically it. I really wanted to go over today, especially because I had a losing trade, and I want people to look back at that and see why, I lost and what I could do to, like see an example of why we talked about examples of winning, show an example of why I lost today and what could have been done better. So yeah. Why is my trading view showing delayed quotes for NDX is not open right now? NDX is not open right now. It's aftermarket, so it won't show NDX moving. Rooster, don't worry about that. You could literally watch this recording from the beginning. It's only like 25 minutes long. But other than that, I will catch you guys later. I hope everyone has a great night. If you're interested in trading with us, check us out at bulltradefinder.net. If you're interested in copy trading with us, btf.peakbot.com. I'll catch you guys later.